On this episode, we're talking to the CEO and founder of Accrue, the new real estate funding platform on the blockchain. Find out how he's getting the word out about Accrue, the newly launched platform, and the tokens they have. Joe's going to get all the information you need to know to get it started on Accrue.
Hello, Mohsin. Welcome to the show. Let's get started by giving us a brief background about yourself.
Thanks for having me, Joe. It's an absolute pleasure. So my name is Mohsin Masud. I'm the founder and CEO for Accrue. Accrue is a platform for fractional real estate investing. My background is completely real estate. I come from a real estate family. My family business has been investing in commercial real estate across the globe. And that's where my journey started from. You asked me to code to save my life, and I will not be able to do that. I don't have a tech background at all. So I've invested in real estate and managed commercial real estate investments across the world. I was heading our family's office in the Middle East right after I graduated from York University up in Toronto. After that, I started to head the global portfolio and expanded into the North American market with investments in Toronto, in Canada, and then across the West Coast. So LA in California, Phoenix, Scottsdale area in Arizona, and then Reno in Nevada. This is back in 2010, 11, and 12. At the same time, I also went to Harvard Business School and then Graduate School of Design for some executive programs. Most recently, I went to Site Business School at Oxford University for a program in blockchain implementation and strategy led by David Schreier about 2 years ago or 3 years ago at this point. I kind of spun off from my family's portfolio company and set up my own shop and started to syndicate deals, raise capital, minimum investment of $250K, and had assets under management of about 50 mil up until 2019, at which stage I kind of left that, handed that over to my partners and moved 100% with Accrue full time. So that's a quick rundown on what my background is, what my history is. But I'm excited to talk and tell you more about what Accrue does and how it functions and how it's taking real estate to the next level for everyone out there.
Well, two important things in life is definitely learning and doing deals. And that sounds like you've been doing both of those, huh?
I try. Every day's a new day and you learn something new every day. But deals I love to do as often as possible.
All right, well, let's dive into what Accrue does. Currently blockchain has evolved and we're moving into a world where there's going to be a lot more tokenized assets that, freely or somewhat freely trade across jurisdictions and different types of, income level or qualifications. So start with us. What is Accrue at its basics?
Yeah, so I think it's important to start off with how Accrue started off, right? So right before this, I was telling you, I used to raise capital and I used to deploy capital across the Midwest in multifamily syndications. The biggest issue that I faced was your redemptions and then the minimum raise of being at least $250K. Some of my favorite investors couldn't invest in all of my deals. So back in 2018, I was up in Toronto for an investor meeting and one of my friends sat me down and he gave me the full rundown on blockchain. It's like, wow, this could really, really resolve the issues of the large minimum investments and then the redemptions that you have to deal with as a syndicator. Fast forward a few months, we ended up hiring a massive legal team, great guys who were able to get us a pathway to open up a compliant platform, which is US based, which was the one most important thing for me. Given my background in finance, I knew that what we're trying to offer in terms of fractional ownership in real estate in order to democratize commercial real estate investments, no matter which way we look at it, it passes the Howey test and it will be considered a security by the SEC. So we had to talk with them. So we spent about a year and a half in trying to get that pathway in place and trying to have the right approach to it. So we started developing the platform back in 2019. And the platform that I'm talking about is essentially Accrue is for fractional real estate investing, where you can invest for as little as $1,000 on the investor side, and on the syndicator side, you get, or an asset owner side, there's a long list of benefits that you achieve out of it, including a permanent capital structure, including, moving debt from the asset side to the investor side and unlocking the true potential of that real estate asset. So talking about commercial real estate, the largest factor bringing the price of a commercial asset down on a larger asset is usually the discount and marketability when you look at the appraisal report. By fractionalizing these assets and by bringing them down to $1,000 and by creating them as digital securities, we actually have created a secondary market where these tokens can freely be traded. And that aspect, by enabling that liquidity into it, opens up this whole new aspect of a liquidity premium or the reduction in the discount in marketability and unlocks the true value of the given asset. So Accrue, in a nutshell, does fractional real estate investing with a secondary market. So you can buy smaller pieces of any asset of your choosing. You're not investing in an array of assets or in a REIT with thousands of shopping malls. Given last year, no one wants to be in shopping malls anymore, or office for that matter. And you can move in and out and pick and choose within the region, the specific asset, the asset class, and so on and so forth. So it gives you all the power in your hands as the investor. It gives you complete transparency and information, and there's a secondary market for trading those tokens as well.
You mentioned Accrue as could have as small as a deal can have as small as $1,000 minimum, right? What is right. What is the size of these deals, or what type of deals are currently coming to the platform?
So right now we've got 3 deals on the platform. The first 2 were deals that we put out as test deals. So instead of putting up demo assets, we decided to put up real assets on the platform. One was $1 million asset, and the other is a $6 million deal. The third one that's coming up is more in line with the kind of assets that we're putting on the platform in the near future as well, which is about $18 million, 18.6 to be exact. So the ideal deal size on our platform is between $10 and $50 million. We do as low as $1 million asset on the commercial real estate side. And we're open to all kinds of commercial real estate. Now, we want to focus on core assets or core plus assets. So core assets are assets with a stable income and stable history, which are cash flowing really well. Low upside in the short term, but in the long term, there's always upside in real estate. Core plus is little work to it, a little bit of value add, but still an income stream on it. And we'll get into the opportunistic deals a little bit later in our journey. We want to make sure people get the income stream that they're looking to get from real estate, and they get used to these digital securities with regular quarterly distributions going out as those rental incomes to them, and they're happy with what they're investing in before it gets too risky or before we start putting on the higher risk deals on the platform.
So currently, what investors can participate, or is there certain income demographics?
While we look to democratize commercial real estate, and our tagline is making the exclusive inclusive, unfortunately, we're only open to accredited investors at this point. We're working diligently with all the regulators to open up to non-accredited investors, hopefully in the next 12 to 18 months. What is an accredited investor? Is anyone with a net worth of over $1 million, excluding your primary residence. If you make more than $250,000 as an individual, or $350,000 as a household, or if more recently, SEC has added people with various different exams and licenses, like the Series 7 or so on. If you hold any of those and you're in good standing with the SEC, you're also considered as an accredited investor.
Okay. And now, so what is the process? I mean, let's just kind of walk through the different stages of the process. And first, typically you got to acquire a deal, right? So whether you guys have deals on the platform, or another, I guess we'll call them sponsor, brings a deal to the platform, how are those deals vetted?
So we have a very rigorous due diligence process before which no asset is listed on the platform. So if a sponsor brings an asset to us, not only do we do our due diligence on the asset, but the sponsor as well, depending on the extent to which the sponsor wants to stay involved. If it's an individual, let's assume John Jones or ABC or whoever, chances are we're more than happy to tokenize the asset, but they will not be retaining control of the asset, and they will not be retaining management on the asset. But if it's a larger real estate developer, which is a more nationwide developer of sorts, or even a regional developer, or even a more established developer within a local area, and they have the history to support that they can manage these assets, they continue to manage it. And that entire process and decision-making happens during the due diligence period. Due diligence on the asset, on-ground due diligence, financial due diligence, legal due diligence, as well as due diligence on the sponsors and their ability for the asset to perform. So it's about a 30 to 60-day process where we run through the entire due diligence process. We charge a small fee for that because there's various different aspects that get involved, and there's various different third parties that get involved in this. But beyond that, that's when the asset gets ready to be listed on the platform and is tokenized and is put up for sale in fractional ownership.
Now, the benefits of you guys pre-screening is to kind of minimize the risk as best as possible for the LPs or the people that are going to come in to the different properties.
Right. So we have to make sure, because we're offering a financial product, we want to make sure that anyone who's using our services to invest through the platform or even present a deal to the platform, the deal is as successful as possible. This is not a basic hard money lending situation where all that they care about is if they're getting their money back or if they're getting their returns on it. We've got to make sure that the project is a success in the long term. in our process and in our thought process, once an asset is tokenized, there should be no reason for it to be taken off the platform, and any trading or any gains or profit taking that needs to happen should happen by trading those tokens. So even in the case of a development project where it's, let's assume, a multifamily building, which still needs to be developed, if you're investing pre-development, once there's stable cash flow, the value of that token is going up. And depending on how far the market has gone, that's how the value of the token should go up. Now, we do quarterly valuations on each of these assets to provide some guidance on what the value of these tokens will be, but we don't determine the price of each token. It's a free market. People can trade them freely depending on whatever price they want. So if someone could think that their token is worth $100,000 versus $1,000, and so if someone needs liquidity right away and wants to sell, they may want to sell it for $900 as opposed to $1,000. So or if the market, if the last traded tokens are $2,000, you can sell it for $1,800 or $1,900 if you need the liquidity right away, kind of deal. So free market decides what the price of those tokens is, but it's a journey throughout.
So as a sponsor that identifies a property and submits it to you guys and gets approval, them also making the decision to go with Accrue, what are all the benefits that they should be able to see from the sponsor side in going with you versus another platform that's currently out there?
So there's a bunch of different benefits that come in with Accrue, with tokenization in general, but more specifically with Accrue. So one, you get to recapture your gains. So you don't need to sell the entire asset in order to recapture your gains. Two, you get to you get a permanent capital structure. You don't have to deal with redemptions, or you don't have to deal with anything on those lines. Your true value of the asset is unlocked. Back to what I was talking about earlier, it's as that discount on marketability goes down and that liquidity premium gets added, the true value gets added on. The reasons why people would want to do it through Accrue as opposed to other crowdfunding platforms out there or some of the other tokenization platforms, we make investor management super simple. So everything happens through a single dashboard, along with compliance. So you've done a bunch of these deals before. You understand the compliance that comes in with Reg D or Reg A plus or anywhere where you're raising capital. That's a major issue. And then we've got some unique products like leverage for investors directly. What that means is 95% of real estate assets go for capital calls because of debt servicing. And that's a massive number. If we can remove the debt from the asset side and let every individual decide how much they want to lever up their investment by using our margin trading product on our platform, the sponsor is relieved of the trouble of going after capital calls because of debt servicing. The asset gets super stabilized from that perspective. So what that essentially means is it's not that there's no debt and you're going to see unlevered returns, which are really low. All that just means is if I want to have a 75% debt to equity ratio or loan to value, I can do that and I can take a higher risk on it. If you're more of a risk, if you don't like taking risk as much, you can keep it as low as 30%, 20%, 10%, or 0%, depending on whatever your risk appetite is. And you can lever up or lever down as you choose to do so straight from your dashboard. You don't have to go through the entire refinance process or anything on those lines. It's truly margin trading like you would on your Fidelity or your Schwab account. You would do that with the security tokens.
Let's go a little bit more in details there, or at least clarify some things. So are you saying that, let's take a $1 million property. Are you saying that, but we still have maybe a 500,000 senior and then 500,000 or so that is tokenized. And then within that equity stack of that owned by the token holders, they can leverage their own position?
There will be certain assets where that would be possible. But for the most part, what we want to enable is remove that senior completely and let people, instead of that senior being placed on the asset, that is placed directly on your security token. So that lien is, or that mortgage is not, there's no mortgage on the asset. And that's not a requirement. That does not mean that all the assets on our platform are debt free. That's just an option that we're giving out there. And obviously the more the asset is levered, the lesser the investors can borrow against it, and the lesser liquidity they can have just by borrowing money against their security tokens on the platform as well. So there will be a certain point where people will start seeing more and more of that benefit on there.
And so when they're, I guess it was taking a margin position or a borrowed position, is that something they typically do on the initial subscription, or is that at any time?
So that's at any point in time. So we're launching our pilot July 15th. with some local banks here in Ohio, because we're based out of Cincinnati, Ohio. So we're starting our pilot in the next few days, where you can borrow against your tokens at any point in time. You can pay it back at any point in time. Your repayments or your debt servicing is scheduled in line with the quarterly distribution coming from that asset. So for instance, again, that $1 million asset, if you own one token, that means there's a total of 1,000. So, or let's assume you own 100 tokens, so you own 10% of it. The NOI on that is $100,000 per year, or $120,000 per year. So every 3 months of distribution is essentially $30,000, and your 10% on that is $3,000. And your debt servicing payment, for instance, is $2,500. So the way that our smart contracts work is debt servicing, it automatically gets paid from your distributions prior to you getting your distribution if you have an outstanding payment at that point. If you decide to pay that $2,500 beforehand for your debt servicing, because you're highly levered, or that's why you have such a high payment, you get the full distribution right away. So we're able to utilize smart contracts in a very unique way. And the way that we have them set up on the platform is extremely unique, and not just for the investment side and instantaneous settlement, but also long-term compliance and simplification from that perspective.
So who is the lender? That is, I guess, will back the loans. I mean, that's right. And typically, how are they underwriting the risk and the rates, and those rates being compared to what's on the market today for debt?
The way that the rates are working out is truly like margin trading, where there's no real, like there is a term on your margin trading account, but it automatically renews, right? And then the rate on the real estate side is slightly higher than your traditional rate. So the rate will be prime +1 for the most part on majority of the assets that get qualified to start off with. And you're looking at quarterly interest-only payments. So, as I'm sure you could appreciate, for a long-term hold where you don't have to make a principal payment on it, and as the value of your asset either goes up or goes down, since real estate is cyclical, your monthly payment or your quarterly payment is just your interest payment. So you're truly maximizing your return at that point. And when you're moving away from that debt, moving the debt away from the asset side and bringing it on the token side, it makes it so much easier. And then from the lender perspective, it's a loan that's backed by securities. And is not a real estate based loan. So it makes it a lot simpler, and like Dodd-Frank and all that fun stuff doesn't get involved, and makes it that much easier, which to process these online and get these done.
Is that going to be like a community bank or larger institutions?
We're working with two localized banks, so two local banks over here right now, but we're in talks with some larger institutions to participate in the platform. And as those larger institutions come on as part of that leverage pool, those rates become more and more competitive, and they become that much better for the investors.
What is the, I guess, wow, that, it's very interesting. It's the first time I kind of heard it done this way. You know what I mean? So my question is, I lost that for a minute, is now, is that lender looking to accrue to report on that NAV or that assets value every quarter to, for the loan requirements?
Yeah, so even the lender is using our platform. So just like an asset owner would get their own dashboard, the lenders would get their own dashboard with complete a reconciliation and records of every possible margin trade that's out there, every loan amount that's out there to every user, with all their KYC information, with the NPVs on those assets on a quarterly basis, and reconciling all of that. So compliance from the lender side is made super simple as well, not just from the asset owner side. And we're truly leveraging the platform for making that compliance aspect easier through and through. So our platform uses a multi-token architecture. So we've got the security tokens, which are the real estate backed tokens, where a series of tokens represents ownership in a specific asset only. Then we've got our utility token, which represents money deposited in your virtual account. So once you sign up on the platform, you deposit that. And those two tokens are the ones that are used for transacting. So when you want to invest in an asset, investing is super simple on our platform. It literally takes 2 clicks. So you choose the property you want to invest in, you click on the Invest Now button, select the number of tokens you want to buy, and you click Invest Now. There's a confirmation to it, and that's it. So Invest Now, confirmation, and the transaction is done as long as you have deposited money in your online account prior to that. So the third token that we have is the really unique one. That's the ID and governance token. That's what enables us to make that whole compliance, tax documentation, reporting, all of that aspects more streamlined on our platform than what anyone else has. So we're not just saying, hey, person with wallet address ABC123, the whole 9 yards is person, John Jones. We're saying person with this token in their wallet is person John Jones versus, so we're super simplifying the access to that data as well from the perspective of lenders, sponsors, investors, and their abilities to utilize their rights based on that.
Well, that sounds good. And so, I guess we were at sourcing, raising equity stack. So a sponsor chooses your platform, they get vetted, they're approved. Currently, how is the traffic of the LPs driven to the site or to the deal? How are they attracted?
Right. So every deal on the platform is marketed equally. We don't make any additional money by marketing any specific deal, or we don't have any such sources. We like to market each deal equally. Any active deals, any new deals obviously show up first, and then the older deals then start to go on. So there's a simple algorithm in place which has no human interaction with what's shown first and what's not, and we want to ensure that there's no way a human can mess around with that. In terms of traffic, we had about 10,000 users on the platform last month, and that number is growing. So we just launched the platform on March 25th, where we were the title sponsors at the Security Token Summit. In the last 2.5 months, we've transacted over $500,000 worth of tokens on the platform. We've gotten over 150 registered accredited investors, active accredited investors on our platform so far, and that number is growing every day. I looked at that number last week; it was 120 something. On Friday, when I looked at it, it's just over 150 investors at that point. So that number is growing very quickly, and we're working diligently to attract more and more customers on the platform. Now, the biggest issue that a lot of platforms have is, does the chicken come first or the egg? Where do you get the LP investors first, or do you get the real estate deals? And that's where kind of my background in real estate comes into play really well, because I'm from a fund that owns a large number of assets, which are core assets that can easily be listed on the platform. So we levered that. We created a partnership with the fund, and we asked them to commit a certain number of assets. So they committed to 14 assets on the platform, which we're bringing out one new asset every month. And that's how we're ensuring that the LPs don't get bored with just one or two deals or the same kind of deals. At the same time, we're bringing on third-party deals on the platform as well.
So, I mean, any specific marketing mechanisms that are kind of put in place right now from beyond, obviously you're doing the podcast, but it always seems a while to attract, or let me rephrase that. When it comes to selling the security token idea currently in the blockchain space, it's new to people, right? So I think it's taking a little bit longer than everyone expects to get traction. And then once it catches on, it'll do its quick growth. So what are you seeing? Is there anything else that you can see to kind of help move that in a faster direction?
Right. Yeah. So the biggest thing that we have to deal with is we have to educate people. And that's what we're doing at this point. That education comes in the forms of media publications, podcasts like these, that it comes in the forms of digital advertisements. So we've got our digital ad campaign going on right now, where we're currently spending just a little bit more than $10,000 a month because we're running our customer acquisition testing right now. But as that testing matures, like we start off by spending $5,000, $7,500, now we're at $10K. We expect to spend north of $75,000 a month within this year. And that's our big go-getter on the customer acquisition side, and getting those LPs on the platform. And again, the purpose of that is educating people. And that's the one thing. Every time I'm on a podcast, or every time I'm at an event where I'm speaking, or I get to talk to a larger group of people, we see that spike in the number of users on the following day when it gets published, or the following week, depending on the scale of the event or so. And similarly, we got published in business journals and Yahoo Finance, and every time one of those articles comes up, you start seeing that spike. So we're working very hard in educating people on how they can benefit from security tokens, how they can, whether it's taking your gains from crypto and putting it in something like real estate for a more stable return, a lower return maybe compared to crypto, but a more stable return for sure. Or taking how you could use your IRA dollars and use Alto IRA to invest in our platform using your IRA account, or how right now working on bringing on a 401k provider where people would then be able to invest utilizing their 401k dollars in their 401k plans as well. But stay tuned on that. We'll keep you posted on that. So there's a bunch of different ways of bringing these the LPs and the users and our true customers on the platform, so they can have access to the asset class, which previously they did not. And by the way, like we talked about accredited investors and high net worth individuals, most of middle America falls under that accredited investor threshold. So anyone who makes, as a household, makes more than 350K, which is your senior management at any large corporation, be it P&G, be it GE, be it Walmart, be it, you name it, any sector, anything across the US, be it auto, be it consumer goods, be it electronics, you've got more than 12.4 million accredited investor households across the US. That's a massive number. Out of a population of 320 million, there's at least about 60 million people which are accredited investors. And taking that in account, it's a massive market that we're still addressing to. And there's a very large number of them who don't have access to commercial real estate investing. They don't have the ability to invest $50,000 for 5 years and lock it up because they have too many other priorities, or they don't have the ability to, they don't even have the access to the private developer who may be great in a region. Their easiest access is going and buying a duplex or a single family and renting it out, and then having to deal with all the tenant pains and your phone calls and maintenance issues and this, that, and the other, where they usually run away from it after doing one or two of those, and they're like, well, it's good income, but it's a lot of headache and it's not making much sense for me. So those are the people who we're trying to educate more and more on how they can benefit and utilize our platform for developing their real estate portfolio.
Well, let's go into those aspects. You mentioned headaches, and kind of leads me to management, right? So once the sponsor has launched the deal on your platform and the LPs have contributed, now, they have a closing, and, how does the LP receive tokens, or where is that custody?
We've got a wallet provider that's fully integrated with our platform right now, and all tokens get self-custodied by the investors or the LPs within their own wallets. And that the way that we've created the integration on our platform is super simple. It's not that you have to download another wallet extension or anything on those lines. It's a super easy and simple the login process from that perspective. The way that the actual transaction happens, so every sponsor, when we list a deal, let's assume $1 million deal again, just for ease of numbers, that's a 1,000 tokens that they're selling. They're going to set a minimum number of tokens sold and a maximum number of tokens sold. That minimum could be the full 1,000, but usually that minimum could be anywhere from 50% to 75%. So the minute that minimum investment gets hit, so the minute the 500th token gets sold, those tokens are automatically transferred from the property's wallet into the buyer's wallet. And how do people make those investments? So in order to commit, this is not a commitment letter or an LOI that you're giving in, or it's not that you're signing off on a PPM and sending in or wiring in your money later on. You've got to have money in your online account before you decide to invest in an asset. So that proof of funds is already there. There's the entire concept of escrow is kind of gone away. Money gets locked into people's own wallets and their own accounts when they place a commitment on something. So the second that minimum investment is reached, the money transfers over and the tokens go into the owner's accounts. The entire process is streamlined. So the entire escrow process and transfer agent process gets super simplified by using smart contracts and using the platform.
All right. And then after, the deal is fully funded, from the sponsor standpoint, kind of what is their role from thereafter for management of the asset, but also management of the fund?
Again, with our focus on core plus assets at this point in time, the fund management side is very little, right? So they get the funds transferred and the title to the asset gets transferred over essentially. So while the deal transacts completely on the platform, there is a back-end closing like the traditional real estate world that still has to take place, and that still takes place where the funds are given to the current owner or the sponsor, and the title gets transferred into new SPV. Now, depending on the experience of the sponsor and if the sponsor is qualified during our due diligence process, the sponsor gets to retain management. But Accrue acts on behalf of all token holders or all the LPs. So the sponsor has no headaches or no hassles of dealing with 1,000 separate token holders of $1,000 each. We've all raised money, so we all understand that the more investors you have, the more phone calls you have to attend to as a sponsor. So we get that in mind. And so we made the investor management aspect as simple as a single dashboard. If there's any issues, the people who they have to answer a call to is Accrue management, which is our platform's management side of things. Now, we don't charge anything, neither to the sponsor nor to the token holders. We're just there to watch out for the best interest of the asset and then for the token holders. And the sponsor at the end of it is also a token holder, right? So $1 million asset, 1,000 tokens, 500 tokens sold. The sponsor gets the remaining 500 tokens plus the $500,000 in cash in it. So the entire ownership cap table is represented by tokens on the platform, and everyone's ownership is all the same. Obviously, the governance token allows, hey, this guy is the project sponsor. Their tokens are locked in for the next, 3 years or 5 years or whatever the initial term commitments are. Or if there's a construction loan on it, hey, these are the key stakeholders or the key players. These are their terms on their tokens. But that's all done using our unique smart contracts and our programming that we put in place for this.
I mean, what happens if let's say an asset goes dark and the manager or the sponsor is supposed to step in and kind of release that property, or doesn't fulfill his role? What do you guys have to do?
Once an asset is fully tokenized, all ownership is represented through tokens. That's where accrue management kind of has to come in the interest of the asset and in the interest of the token holders. We come in and we have the ability to fire those the existing managers and put in place new asset managers in the asset. And given our expertise in commercial real estate, now my background, my expertise are purely in multifamily and mixed-use buildings, but the rest of our team brings in expertise from different aspects of commercial real estate, which enables us and puts us in a good place to appoint the appropriate managers and to make sure that asset gets out of the red and we're able to bring it back up to the mark in an effort to maintain the interest of all token holders. And that's exactly why the asset gets moved over into an SPV and doesn't remain in the same title as it previously did. There's plenty of other legal reasons why we choose to do that. So
you guys seem like you got your a pretty busy role to fill. I'll put it that way, right? So of course, that has to come along with some fees, right? So what are some fees to kind of expect from the sponsor side, the deal side, or the LP side? Kind of how does Accrue make money?
So right now we're in the mode to go and get more and more investors and more deals on the platform. So we're a no fee platform, both from the sponsor side and from the investor side. The only fee, however, that we do charge right now from the sponsors is our due diligence fee, which is not a very large fee. And again, that the entire purpose is to cover due diligence costs, different reporting, different valuations, yada, yada, yada. And then there's a little bit of legal costs involved from that. That fee can be anywhere from $5,000 to $75,000, depending on the size of the asset, how complex the deal is, and what the rollout structure is, and what all the due diligence will entail on it. A lot of the due diligence is standardized, but some of it is unique. As you know, real estate is, every asset is unique to its own self. So every due diligence aspect gets a little bit tailored from that perspective. So
back to the kind of just the LPs and finding investors to the site. Do you see that majority of the LPs that will fulfill the subscriptions on these deals be from Accrue doing the marketing versus that sponsor bringing that his own investor base? Yeah. So eventually that's the goal, right? But the idea is that even if the sponsor is bringing his or her own investor base, their investors now have liquidity. They don't have to deal with, the sponsor doesn't have to deal with any kind of redemptions. The sponsor and their investor base for an existing deal is able to recapitalize on their gains without having to get rid of the entire asset. So assuming you invested in an asset when it was valued at $1 million, now it's completed, it's streamlined, you've got a steady income flow coming from it, and now it's worth $2 million. You only have to sell the tokens worth the gain if you want to, or a certain portion of it, or whatever the sponsor originally decides. And all the sponsor and the LPs in the existing deal can retain the rest of their ownership as it was prior to it. So you get to recapitalize on your gains without losing the asset in itself, or without losing your interest in the asset in itself, and you get to benefit from it in the long term as well. But yeah, that's the thought process on it. And I kind of lost track on what your question was. I apologize on that. I don't know if I was able to answer it completely. No, it was good. It was yeah. I mean, I was there, but I think we hit it. So from the management standpoint, I was just thinking, so kind of after, from a Accrue standpoint, so was the responsibility of, the management to the management company more on Accrue or more on that sponsor to manage the manager for that property on an ongoing basis and collect the income and so forth? Right. So the way that the platform is built, we have webhooks and integrations with all major property management softwares, be it Yardi, be it Appfolio, be it some of the other hospitality-based softwares. So we get direct reporting from any of those assets.
So to simply answer your question, we expect that if the sponsor wants, and that's part of the due diligence and negotiation phase, they get to retain management of the asset. Because a lot of times that's an income stream for the sponsor that the sponsor loses when they sell the asset. And we don't want that to happen. Provided they qualify and they're qualified sponsors and they go through our due diligence process and we're satisfied with them. A crew only steps in if that management is not happening at bar. Now, how does the fund distribution happen? We integrate our platform with existing asset management softwares for direct reporting, instantaneous reporting. We integrate payment processes and payment methods with our platform. So 2 years from now or a little while from now, the idea is every tenant, be it a Walmart or a Walgreens or a triple net lease tenant, or be it individual family-owned bakery in a strip mall, or be it an apartment resident, should be paying their rent all on the same platform. While it's integrated with various different property management softwares, all financial aspects start happening through the platform in itself. And the sponsor still has control over it or is still able to utilize the funds as and when they're required, but it all happens through a single platform, which is Accrue in itself. And so that brings a lot of transparency for the investors and also for the sponsor in itself. We're not saying, hey, money's coming in your account that is run on the Accrue platform and you can't take it out. It's like running a regular checking account where you can deposit and withdraw money. So that still remains, but we just want it to be streamlined so everyone gets to see the entire picture and not just, hey, this is what the reporting on it is at the end of every month or every quarter.
How long do you think it'll take for all payments and expenses to all be integrated through, on a ledger that kind of allows everything to roll up together from the loan to the token to the payments and everything? And you could kind of quantify what the cash flows are in a very easy dashboard with the cap rate and value.
Yeah. So in terms of cap rate, value, current expenses, while a lot of it is provided in through human input on there right now and some through various integrations, it's still there. So there is an LP dashboard that's there where you can look at what your current investments are, what the status of your investments is, how each deal is performing, what your expected returns are, and what your current returns are, and IRR based on whatever schedule you want to set it as. So you can you can pick and choose. Hey, I want to hold this asset for 10 years or 5 years, and this is based on the expected current returns on that asset or the projections of that asset. It'll give you, hey, this is the equity multiplier you'd be looking if you hold it for this long. This is the IRR you'd be looking. This is the annualized ROI that you'd be looking on it, or the cap rate that you'd be looking on it on an annualized basis. But the entire process is hopefully going to be there in the next 18 to 24 months. But it's a constantly developing product, right? Any product that you look at, once you develop it, you leave it alone. Those are the worst products. You get sick of those really quickly. So the product evolves every day, every year, every month. It's going to constantly improve and work better and better as we bring on more and more features on it.
If I'm an LP with ownership in these tokens, what's the rules around when I can retrade or resell that to another party, and what's that process look like?
Yeah, so there is initial hold period that we're. Let me back up a little bit to answer that question. Our platform right now is only open to accredited investors, and we offer these through Reg D 506C offerings. And it's a closed platform where all investors on there are verified accredited investors. They're not just a solemn declaration that I'm an accredited investor, checkbox. So we actually have to verify them, and we have to go through that process. But what that does enable us to do is that we're able to have that secondary marketplace without being an exchange in ourselves. And it keeps us compliant on the regulation side of things. They can start that secondary market trading in as little as right after the offering, depending on how long the offering is. So if it's a 90 to 180 day offering, it can happen right after, or it's usually 180 days from the start of the original offering. So if an offering goes live on January 1st, starting June 30th, you should be able to start trading it on the platform. So very, very small hold period. Any secondary market trades don't qualify for any hold periods. Once the secondary market opens up on every asset, you can go ahead and you can start trading it.
If I'm that secondary market buyer and I create an account, log into the platform, I could see what's for sale. What information is going to be available to me to the current present value and kind of status of what that property is at on that day?
Yeah. So anytime once someone signed up, you have access to all the information related to all the different listings, right? So every listing has its own document vault, which gives you all the previous, all the financials, all the previous valuations. So those quarterly valuation reports, you have access to all of those. But also we simplify the information and put it right there on a single screen for you, which includes last traded value, last month's traded values, what the last distribution amount, last distribution date, next expected distribution, next expected distribution amount, what the current and then there's an IRR calculator that we're putting on there. So people looking at deals on CrowdStreet or other crowdfunding platforms are used to looking at, oh, this deal has a 26% IRR, and not realizing how that IRR gets calculated. Yeah. So we were giving just analyzed ROI numbers to people, and people are complaining about, oh, this is too low. I was like, you can invest in 10x with Grant, or you could invest on CrowdStreet. Your annualized returns are not going to be, you won't be able to beat these returns. 6, 7, 8% returns it's just not going to get better than that on an annualized basis. It would most likely be closer to 5 or 6%, not higher than that, and 6% if you get lucky. Majority of that IRR comes in from when the asset gets sold, or time value of money is another number in there. So we try to keep it real for the people, but we are building in an IRR calculator on there for people to figure out how that deal compares with our next closest competitor, being any of the crowdfunding platforms out there.
So you bring up a good point. Most of the return, or a good portion of the return on deals, are on the equity kicker or the exit, right? And if most of these assets are being established as, I guess we'll call them long-term hold, correct, as we're tokenizing them, and there's not really a value add in a retrade, are the token holders just able to realize the higher returns through either selling their own token and or being able to utilize the margin feature because of that net asset value being increasing over time?
Let me correct you a little bit, right? So it's not that there's no future trade-ins on those assets. Once an asset is tokenized, we expect it to stay tokenized for all eternity. But the entire concept of commercial real estate changing hands as an entire asset in itself is what we're trying to change, and is what's going to change with this process. It's not that you will experience that kicker when you sell your token. So now instead of selling $100 million asset, you're just selling $1,000 piece of that $100 million asset. So you take a 50-story high-rise in Louisville, Kentucky. I'm just throwing it out there, right? And you buy a condo in there. The entire appreciation is then focused on that one condo only, and not on the entire building. Or when you sell that condo, it's not like you're not going to get your appreciation. You get your appreciation as you sell that smaller piece of it. And the entire condo example may not be 100% accurate, but the idea is you take one larger asset, you split it into pieces, and as you sell each piece, you're taking in that appreciation kicker every time. And that transaction is taking place. It is changing hands, just now in a much smaller piece, which is why you're able to get a higher value for it. Not just when you're buying it are you paying a higher value, but even when you're trading it, you're able to get a higher value for it in the future.
I fully understand. So after, if you got a 6, whatever, I use numbers, 5% cash on cash, after year one, if the rents bump 3%, then your net IRR, if you sold that token, might be a 7 or 8. Then, another point or so each year, kind of, and to what typically over a 5 or 8 year, 5-10 year period might be a 15% IRR on a typical deal, but the token just increases per se based on the value, net asset value at that time, right?
Right. Yeah. So you bought that token for $1,000.
Yeah.
5 years later, that token is definitely not worth $1,000 anymore. It's increased in its value. So when you're selling a token, it's the same thing. If you're buying an asset for, let's assume you can buy a house for $1,000 and you can sell it 5 years later for $5,000. That's where your IRR is calculated, right? So it's the gain, the $4 million plus all the rental income that's in there, the NOI from each year and so on, right? It's the same thing in the case of a token. You're buying a $1,000 token, you're getting all the distributions on a quarterly basis, and then at the end of it, you're selling it and you're getting that kicker at the end as that sale. Now, you could get a smaller kicker over a 6-month period or a 1-year period, or a close to 0 1 on a even much shorter period. But when you hold it for a much longer period, it's you're seeing all of those gains regardless. So talking purely from a multifamily standpoint, commercial real estate at large as well, the value of the asset increases. As the value of the asset increases, you see cap rate compression, and the accepted cap rate in the market goes down and down and down. So if I look at when I started investing in Cincinnati back in 2012, we were looking at cap rates north of 20%. Ridiculous, right? Now I can't even get a 6 cap in Cincinnati. Unlevered asset, completely cash. Now I can't even get a 6%. I'm looking at 5 or even sub 5 deals at this point. What that means is it's the same asset. The total income produced is a little bit higher, over the last 10 years, it's not doubled or anything like that. You see that 2% gain every year or so maybe 20% higher over 10 years. But the value of the asset has increased because of the cap rate compression. And because now the accepted cap rate in the market, whether someone is willing to pay money for it, is now 6% or 6 cap, as opposed to an 18 cap or a 20 cap or a 12 cap for that matter. And that's what's getting the value of the asset increase. So as people are willing to accept a lower return, the value of the token goes higher and higher. So if you buy a token today where you have a cap rate of, let's say 7%, 3 years later, someone may be willing to buy it at a cap rate of 5%. And that's where the cap rate compression causes the increase in price. And that's the basis of commercial real estate in general, in my opinion. But that's how you see the increase in price of your security token as well.
And who's responsible for, I guess, holding all the closing docs, deeds, and so forth? And where is that housed?
Yeah. So all the deeds, all the documents, everything is held and managed by Accrue management. And that's the whole purpose of it. Each entity is set up as a separate SPV and as a separate legal entity in order to separate each asset from the liability from the next asset, and in order to ensure the best interest of each of the token holders. So each asset is dealt as a separate entity, and therefore all documents are held in a very siloed mechanism for each asset individually, but all managed by Accrue, both in digital and paper form, as whatever the local jurisdiction requires.
I guess one of the last important things that maybe touch on is security, right? How secure are these tokens? Where they're custodied at, and how secure is that? And what are the certain measurements you guys take to manage risk?
Right. I think one thing that people forget a lot of times is real estate is a generational asset. And I'm going to get to the security part by the end of this, trust me. But real estate is a generational wealth building asset. People invest in real estate not just for building their own wealth, but passing that wealth down their generations. And it's very commonly used as a way of passing your inheritance to your heirs. The problem that a lot of people have experienced in the last decade with crypto is once you lose your keys or your private key or your access to your wallet, you've lost your crypto forever and ever. On our platform, the way that it works is we use blockchain as the underlying technology, right? So we use the immutable ledger, the nature of that. We use a multi-token architecture, which lets us know who owns what at any given point in time. And then at the same time, if someone does lose access to something, or if someone passes away for that matter, we have the ability to burn and reissue those tokens. So God forbid, even if someone is able to hack into your account today, your Accrue wallet today, and you lose those tokens. One, they can't transfer them to a non-Accrue wallet, not because the wallet is not there, because the way that our platform is structured and the way that our platform is done is it has to be in a whitelisted wallet. Otherwise, the transaction will not go through. The security token just will not transfer into a non-whitelisted wallet. Two, even if they're able to transfer it and they're able to put their wallet to rest on our whitelist, we can easily transfer it. We can easily burn those tokens and reissue you new tokens based on that. So we take security extremely, extremely seriously. And that multi-token architecture enables us to do that as well. It's not just for the compliance side of things. It's not just for the reporting side of things, but it's truly for making sure that your money and your investment is as safe and secure as possible. And for that, we have very, very in-depth procedures in place in order to burn a token. Even as the founder and CEO of the company, I can't go ahead and burn a token just by myself. We have very rigorous protections in place for the asset owners. It's only if there are appropriate legal documents in place, or if there is an actual breach that takes place, we're able to revert it back with the appropriate people involved in it.
I think that covers everything. I think we went through all the different steps in which they can participate with Accrue and how the tokenization of real estate, happens. I mean, is there anything that you'd like to leave us with in regards to the process there?
Yeah. So, again, 6 simple steps to sign up. You have to go through a full KYC and accreditation verification, but that's a little cumbersome, but that keeps us compliant, unfortunately, and we have to do it. But go ahead, check it out. Check out the platform, akru.co. Pronounces Accrue. You accrue your wealth over time, and you build that generational wealth. Start investing with as little as $1,000, and we believe in making the exclusive inclusive.
That's good. And we always have a final question. That is, what is the biggest thing you have implemented in your life that has increased your net worth?
You know what? People are going to think I'm just saying it for the heck of it, but I'm a true believer that real estate is the one best way of growing your net worth over time. That's how I've seen it happen in my family. That's how I've done it for myself. All the education on one side, all the life experiences on the other side, that's all great. That's all very important. But the one reason for me to be able to build my net worth is my real estate portfolios and my real estate investments and my strategies on that front. That truly impacts my net worth by the end of it. So, yeah.
What are some of the, I'll add on to that. So, in increasing net worth, what are some of the things that maybe is done for you or your family or, the benefits?
Yeah. So we take a lot of advantage, not just for myself or my family, but also for our investors for tax shelters and tax benefits, like the opportunity zones over the last 3 years, or like-kind exchanges, 1031s, like the uprate structure that we're looking at implementing at Accrue as well, hopefully in the future, where you'd be able to do a different kind of like-kind exchange, but still, do an uprate kind of thing over there. So, and this is, I'm talking very specific to US tax codes and US benefits, but you have similar benefits across the globe, be it Europe, be it Africa, be it the Middle East, be it Asia. Real estate has always preserved wealth. It's hedged you against any kind of inflation, and that's how it's worked for me really well. And real estate is a cyclical market. You've got to understand that cycle. You've got to be prepared to work with that cycle. And one thing that I very strongly believe in is you make your money when you're buying something. So if you keep your focus on that, you keep that bullseye in your sight, you're not going to lose money if you do it right. I'm not saying people don't lose money. It does happen, but you've got to have that long-term strategy. Like any investment out there, nothing is great in the short term. There's too many implications on it.
So what is the best way for listeners to learn more about Accrue or get a hold of you?
You can log in at accrue.co, akru.co. And you're always welcome to get a hold of me at MMASUD@accrue.co. That's my first initial and my last name at accrue.co. So feel free to get a hold of me. Always happy to chat. Always happy to answer anyone's questions and let people know if I can be of assistance or anyone from my team, we're happy to be there.
Mohsin, I greatly appreciate the information you brought us today and for coming on.
Thanks so much, Joe, for the opportunity. Had a blast today. This has been phenomenal. Thank you.
Hey, everyone. Thanks for watching my latest interview. If you like what you saw, please click the subscribe button below to become a member of the Joe Robert community. Be sure to hit the bell to turn on all notifications so you always know when I post a new video. Tell me what you thought about the content in the comments below. I always read them and would love to answer any of your questions.